All right, guys, what's going on? Do a quick update. It's just after 1 p.m. Eastern Standard Time. Apologies for not getting on here over the weekend and giving you guys a quick video update. Uh, I think I mentioned this on the Spaces the other day. I was surprised I was able to talk as long as I did, but I didn't realize that. I had gotten a wisdom tooth taken out, and they actually had to cut into my jaw a little bit. And the procedure was like, it was done in just a few minutes. And right after, it wasn't a big deal, but he had said, all right, 3 to 4 days later, or 2 to 3 days later, whatever it was, that's when swelling will start to kick in. That's when you'll start to, have some discomfort. And sure enough, there was like 2 days where it just absolutely sucked. So I wasn't in the right headspace to even hop on a video. Um, Teeth pain, eye pain, something very unique about those two types of pain. And listen, I'm sure there's a lot of other pains that are way worse than that. I've had a significant amount of injuries in my life, but those stand out for some reason. I had a corneal ulcer, and then tooth pain as well. And it's like, there's just something about it you can't ignore. And it completely takes all of your attention. But anyhow, here we are. So I'm going to do a quick update. I'm going to talk about BTC, just talk about my thoughts about the market right now. And most of the stuff that I'm going to talk about are things that I briefly touched on in the Telegram group. So hope you guys are enjoying that group. I'm going to try to keep it as populated as I can with just like daily thoughts and mix the stuff on the market and things outside the market, and kind of just have it as like a more market oriented stream of thought and consciousness. But anyhow, let's get right into it. First things first, BTC, high time frame. You're looking at the weekly chart here. So we just had the weekly open, and I'll switch between this and the daily chart. So I want to touch on, the first thing I'll talk about is my most recent post. And what I had said was, one, just as a caveat, this is not this is not meant to influence anyone's trading decisions or get anyone in position that they're not comfortable being in. But what I had said was, I think that this is probably like the last really good risk reward short opportunity if we're going to continue to move up into the end of the year. And there's a few reasons why that's the case. You guys have heard me phrase it like this before. From a contextual risk reward standpoint, we're really close to a level that, in my opinion, signifies a significant shift, a significant change has taken place. It doesn't take a genius to look at this chart and see kind of what the pattern of events has been over the last few months. And it's more than a few now, right? It's going all the way back to March. And specifically talking about the case that we've been kind of funneling lower, fanning out lower, making, lower lows, lower highs, and each of them are different from the last. But it is a case that pattern hasn't really been broken yet. So sellers have been doing a decent job of walking this down, and buyers have not really been able to do that good of a job of breaking the pattern, right? It's no reason to try to complicate it. So market looks like it's in a range depending on one way, but if you're really going to define this from a higher low and lower low and a lower high standpoint, I think it's obviously the case that the market has more of a negative drift than a sideways drift. So the 65 level to me is sort of that pivotal level where things begin to really change, right? It's something worth, like, even if you're not, that tuned in right now, I think that, or even if you, excuse me, I should say, if you are very tuned in right now, I think that that's like the level where kind of everybody has to get tuned in. It should be sort of set on an alert, even for people that haven't been focused or, I don't know what I'm trying to say. I'm trying to say that this is the effect of not paying a lot of attention recently, but it's just a level that should have everybody's attention, right? Again, because what it means is, from a recent standpoint, we're overtaking this August level, and again, we just haven't been able to do anything like that in the last few quarters, not even just few months. So that 65 level also happens to be the level that the anchored VWAP is from the highs. So if you put a VWAP on from the March high, if you look at this from just a range standpoint, it's basically like midpoint, right? So it's the half of the field that the bulls need to see this get into before they can really make a case for things shifting. So again, like we're knocking at that level. They're knocking at that level. ETH is moving up. Some alts are outperforming. I think the one thing that stands out to me is just like taking just a litmus test of CT and Twitter or I should say sentiment test more specifically. It would appear to be like if you just looked at that alone, you would think that we were much higher, right? So you would think that we were trading much higher, but it's a case that people are getting very excited and we are at resistance. And I think more importantly, from a positioning standpoint, and remember, this doesn't speak to the levels of actual leverage in the market. There's no telling, how much margin is behind this actual position or how much margin is controlling this positioning, how collateralized these people are, if it's one large entity or a bunch of small entities, not speaking specifically to the positioning, but just more generally, if you look at the fact that we haven't made a higher high, that's not the case with open interest. All right, so from a price standpoint, we're knocking at the door, right? Basically as even as it gets, but we haven't made a new high going back to that August level, August 24th, 25th. But meanwhile, open interest has continued to trend up. And I point this out because there's been so many times where this has been the case, where there's a level of excitement in the market is getting pre-positioned for a break, and ultimately what follows is, hey, maybe the market might mark up in the coming weeks after that, but there's a rinse and a washout of that early positioning. Like everyone's trying to get on the boat, everyone's trying to be, sitting in the front seats for what is like a, if you look at Twitter, incredible bull run that's going to be coming. So that's something that I think is worth noting. Just a few things on the high time frame. Now, like I said, I'm monitoring alts. A lot of alts I'm just monitoring from monthly charts. So I'll get to that in a second. I'll talk about that right now, actually. So if we look at a lot of alts across the board, we've seen that this is the first time we get to, we'll use SUE as a great example. I mean, SUE is up tremendously now. Say is a good example. Excuse me. Oh, the monthly chart is on the left. Excuse me. It's a 3-month chart. Sorry. So here's the monthly chart. So we're trending down for, this is over half a year. The concept that I talk about and thing I say often is like big ships turn slowly. When they start to turn, you don't expect them to go right back to the course they were going. So this thing is going to have a little bit, I think this shift in momentum is going to have a little bit of follow through if we see green months across the board like we're seeing right now. So September being the first green month for a lot of alts in a really long time. A lot of these alts are already up 20, 30+%, even more than that in some cases. I've seen in the past, right, situations like this occur where people are too zoomed in to realize that things are shifting, at least in the interim, and that is going to have some weight to it. And it's often the case that when you have a monthly shift like this, a big high time frame shift, that you could extrapolate and extend out those time horizons to a reasonable amount as well to accommodate for that. So if September closes green, odds are 90% of the alts that close green September and have had these big months see continuation through October. I think that ends up meaning that the first week of October is probably the best buying opportunity. And I think that it's probably you're offered maybe a maximum window of 10% in some of the stronger pairs. So if you get an October open, what I'm going to be basically doing is right from the October open, bracketing an area between 5 and 10% for specific alts, and looking to see if we get any kind of constructive dips into those levels, and expecting that the returns for October will be positive, right? And this is kind of barring any kind of major changes that are going to override this period, assuming things stay relatively the same and the momentum is continuing to, at least the momentum to the downside has died and we're at least beginning to base out. And you probably see things don't have to be, we don't have to talk about these as if they're going to make new highs. A lot of alts will just, as we've seen in the past, a lot of alts will put in 50% bounces or recover 50% of the drop and then continue down, right? But you'll still see that, and this is what I was trying to say, even dead pairs, even pairs that have nothing going on for them anymore, they will sort of recover that portion of the drop. If due to the fact alone that people are no longer really allocated to them, they've been used as portfolio hedges because people are just thinking that these are free shorts. And you see some of that positioning come off, and it's just an easier move to the upside. And it's not like it takes a lot of effort. It's just there's not a lot standing in the way, right? And these are just already, as it is, alts are very thin. So they trade like thin, illiquid products would. But going back to BTC. So, high time frame, if you look at this on the monthly, this looks like it's treating prior monthly levels, all-time highs going back to October 2021 as support. I think I'm someone who believes in Bitcoin is going to continue to trend higher over the next couple of years. High time frame, this to me looks good, especially if stocks continue up, especially if gold continues up. I think that it helps that Bitcoin can kind of like attach itself to any narrative. I've said often it's like the narrative chameleon. But in the short term, I do think there's the potential, especially going into an election, for this to continue to chop people up all the way to that point. And I'm not going to make an early bet on the market changing until it at least does something that is really noteworthy. And in my opinion, again, like I said, that's like that 65K break. And I'm always willing to, in this market, buy higher. And the cost of doing business is often buying higher, because it's very often the case that those significant changes in market structure, those changes in what has been a recurring pattern of events, get everybody's attention, and then therefore bring everybody into the market. And still, there are people that are still slow to react. So there's sort of this the normal characteristics of momentum and trend that you would get, where the market isn't disseminating all that information evenly and equally across the board. People are slow to react, and you take too much time off, and then this thing is above 70K after a significant break like this. So if 65 breaks, I'm very much risk on in many different ways across the board. Not, like I said, passively indexing on alts. I do think that October approach is good. I'd rather hit base hits and not jump headfirst into the pool again. But specifically with BTC, just a low time frame, I want to talk about this as well. And listen, these streams on the Telegram, some of them might be kind of all over the place. I don't have a lot of thoughts beforehand that I plan on touching. A lot of times I'm remembering things halfway through, but I do want to remain consistent with these. And if anything, this is a little bit of realness that you hear me kind of like lose my train of thought. I think everyone can relate. I made a comment this morning to Trader SC that when my daughter was born, or I was talking to someone in that thread, I definitely felt like I lost brain cells and gave them to her. Anyway, the setup I was talking about was an inside day failure setup. We actually got that setup. I expected more continuation from it, but the trade that you often expect was the one that was given either way. So the inside day setup, just to be clear what we're looking at, we have multiple days of value overlap here. We have a pure inside value setup right here and inside day setup. So what's that mean? Okay, we come off of a really impulsive move. All right, we have like I said, we have pure value overlap or 100% value overlap, whatever you want to say, meaning that the entire value area of this day is inside of that one. So this is almost as balanced as you can get. It would be more balanced if this day was a true, perfectly balanced sort of Gaussian distribution day as well. So we have all value overlap, and then we have an inside day. So inside day meaning, the high and the low of this day completely inside the prior day's high and low. So on its own, if you just have an inside day setup, that's great. If you have an inside day setup where you have this kind of value overlap and this kind of, perfect balance, or as close as you're going to get to perfect balance, makes the setup that, it amplifies the setup, right? It makes it one that I'm going to weigh more heavily than one that is just an inside day setup. And especially because, as I mentioned, this is off of 3 green days. So we've seen this back in the past. I think this was October 22nd or 23rd, 2023, where you had this kind of 3-day inside setup where the final day was an inside day off of 3 green days, led to a fake out to the downside on the open of the following day outside of that balance, and then broke upwards, and that one continued to trend. This one in particular, this is how you would actually look at this setup. So you have this day close out. You're looking at, in the context of this move, because this was a bullish move, and we still have what I thought was, or still think, again, I don't want to act like this is a resistance it's not going to break, but everyone's got to play their book differently. This is, I think, at least a decent target over time. I think that 65K is going to get tapped. So whether or not you're going to extend to the prior day's highs or that's up to you. But either way, this is coming off of a really impulsive move. I'm expecting more likely the fake out to occur to the downside rather than to the upside in a reversal, and the continuation move to come to the upside. So to make sense of that, here's the inside day. So inside the prior day, what I was anticipating, and I mentioned this in the Telegram, is a fake out to the downside, right? Followed by reacceptance and a move back to that day's highs. Okay, so you're looking at trigger points at the extremes. In this case, I'm anticipating the fake out is going to be the downside, and the trade as a result of that would be to that prior day's extreme. This, in the context of that October trade, meant that this move led to the major continuation move. But again, I don't want to kind of write off the significance of the 65 level. So you might have looked at this as T1 and then possibly this as T2 over time, depending or not whether or not we actually held this 64 level, which you could see, we didn't. So the way that I played these particular moves, so again, this is the low, so I'll extend that with a perfect line so it's a little bit cleaner. So that is the low right there. You're looking at the fake out below that low and a reclaim. So in this case, it's more than that, right? You have a attempt at a break from balance, not just an inside day, a reacceptance back into that value area. So here's the breakdown. One sec. That's the breakdown, and this is the reacceptance. Now, in this particular setup, you might think, okay, so what is the optimal invalidation for this trade? Because, I mean, we've wicked below multiple times. This is the kind of setup where I'll use a multiple of the ATR. So if you look at a TPO ATR in particular, so an average sub-period rotation for a 30-minute interval, the average sub-period rotation size over this range is around $300. So if you look at the entirety of the structure up to this point, including that large move up, if you're incorporating that volatility, you're going to say the average sub-period rotation size, so meaning the average 30-minute candle size is $300. I'm giving at least a multiple of 2x, right? So 2x, whatever the ATR is for that 30-minute period, that is the stop distance that I need to have to incorporate for even just price breathing, right? Even for like the normal volatility that you would expect over the course of these days. And that would leave you outside of this prior day's low. So if you're looking at that prior day's low and you're saying, okay, it's my but the level that I'm going to start focusing on, I never just say, oh, okay, we're closing a 5-minute candle through or closing 30-minute candle through. You want to see if there's constructive price action through that, and that's rebid. So, buyers are getting aggressive through this level, bids remaining firm. This is a washout right here. But if you're looking at this on very low time frame setting, if we go down to low time frame, if we go down to 5-minute, you can see that, if we put that low back on, right, prices reclaim that after this sweep, after that illiquid move down. You just have to have the balls to again, just sack up, get in position at that point, and place your stop outside of that threshold. So if a 2x of that ATR, that puts you around $600 below. So 600 below this this low, and your stop would have been right around 62.1, right? And that gives you the expected breathing room for how price has been moving. The normal behavior over the course of the last few days. And the point is, like, if that breaks, if that ATR level is broken, then you might be able to say, okay, maybe things have changed, and I don't want to go in the direction of anticipating that this is going to mean revert and play back to the other side. So if this is unclear, because I'm just kind of running through this, and again, I don't have a script or a plan, and I say that like, maybe not other people don't, but it does help to write your thoughts down and to say them with some kind of form. If this is tough to understand, just please leave a comment on DM me, leave question marks under the post, and actually this will be on a YouTube video. You don't even have to do all that. You can just leave a comment. But that's that setup. The inside day setup in this particular case, context being this is off a bullish move, anticipating that this is going to lead to continuation, rather than there's inside day setups where if you have multiple periods of balance, and we're like 3-4 days into this, and you maybe already have a high taken within the structure, I might look at a situation where you have that trigger point at the low and the high as the potential level to see a breakdown. So, looking at this low, I wouldn't have done it in this case, right? Because we have a couple strong days up, 2 days of balance. I think it's really risky after a strong move like that to expect that this is the reversal right here. But you could, there's plenty of times when the setup would be like that, where you just be looking at continuation off of, you might have just looked at continuation off of this high breaking to begin with, right? But in this case, as I said, this is exactly what happened. You got the fake out first, right? And then you got the continuation move up to those prior day's highs. That again made up that inside day setup to begin with. And you're usually just doing that. If you're taking intraday trades, if you're taking, trades from point A to point B, level to level, as people like to joke around and make fun of that, you are looking at often, if this is the candle setup, right? If this is your trigger and we're playing, like, let's say we're playing the inside day failure, so fail to continue down, reacceptance up, you're often looking at that bigger day's extreme as the first target, right? So in this case, playing up towards those highs. But yeah, like I said, there's many times where this is just literally a trigger for continuation, and you might just get that first trade right there and not anticipate a fake out. But this is why it's like, it's silly talk about these things in advance like this, because the point is, it's never that you should lean too heavily on one outcome or the other. It definitely helps to have one side have a little bit more of an informed bias, depending on how strong the market is trading. But for me, it's almost always like I'm still leaning on what I see at these levels. It helps to just have levels to pay attention, right? If anything, just to get you away from the desk for a little bit, right? Okay, I set an alert there, set an alert there. That move might happen really quickly, but at least I know where I should pay attention. Rather than, you're trading, let's say this inside day setup is here, and you're someone who on the 22nd is all hyper focused on this activity right here, right? Still trading within that structure. It's like, oh, we haven't done anything different. Yeah, we're chopping around, but I need to see something. I need to see if it's the case that value is being accepted here and we're trading, the most accepted prices are within this inside structure. Well, I need to trade the wrong prices then. And the wrong prices would be anything outside of those extremes, at least temporarily. Yeah, I think that covers it. I got a little long-winded on that. I touched on my point about the monthly charts for alts a couple times. So I know I briefly brushed over that on this stream. I don't know if there's anything else that I missed. If I did, if you guys have any questions, of course, leave them in the on the YouTube in the comments section. Let me see something real quick. Where are we right now? So I'm doing all this talking. So today's Monday. So we're establishing probably, at this point, I don't know, I don't want to say the weekly highs or lows are going to be established tomorrow, but if the bulls are going to really take over, you want to see the weekly lows defended, and those happen to be kind of right where we're trading right now. So let's say we get some kind of, we did already have a little bit of excess off of the structure. So, this is kind of odd right here, this imbalance. We'll open this up. You'll see kind of how that transpired. Split by blocks. Okay, that is basically in the first hour or two of the day, you had that move down. Prior day value, trading above yesterday's value, and that level is being defended. So it's fine. I mean, it is a lot of excess. Whether or not we get something a little bit more that fills that out in the later sessions, going to the Asia session like that. If we continue to mark up above the weekly open, I'd probably bet on that 65 level being tested in the near future. So let's just give a little bit more behind that. This is the weekly chart right here. Here's that weekly open. So trading back above today's VWAP, trading back above today's value, that's right around 63.7 area. I'd bet on 65 being tested if we do that now, especially with the amount of activity we had towards this low. It's still holding. This price action is kind of painful right now for anyone who's getting overly committed at extremes. But yeah, look, we're knocking on the door. That's why I said earlier, like from a contextual risk reward standpoint, you're wrong really close. So at least you could take the trade if you wanted to short this thing. But who knows how fast you'll be wrong, which is always a question. 65 is the static level in a vacuum, but this thing could be at 66 in a split second. So you never know. This is a easy way just to see inside days, by the way. If you're not even looking at a TPO chart, just scan the daily chart, right? Scan the daily chart. There's your inside day setup. That's that day. Put it on the actual day that's inside, and there you go. You're trading on September 22nd. That's when you'll start monitoring this and looking for, constructive move through either of those extremes towards that prior day high or low. All right, guys. Hopefully that's been easy to digest. Hopefully the sound has been good too, and I'll talk to you soon.